All right, hello everybody. Today is May 19th, 2024. This is Small Cap Trading Podcast. We already did the weekly review. Today, right now, we are gonna dive into more as far as like specific theme in the beginning of the week. And as always, nothing here we say is a financial advice. So, Mo, I'll take over.
So we wanted to do some trade recaps and do deep dives into these two separate themes that appeared this week, which was the GME AMC and its sympathies, and was the first one, and then FFIE CRKN and its sympathies, but it's a separate one. So we're going to do two separate videos. This one's going to focus first on the AMC GME and its sympathies, and so typically, like, when it comes to sympathies, like I said, like we were talking about in the earlier videos, if you're a long trader and you can identify the theme correctly, the theme consists sort of two things. It consists of which types of stocks are running and how much are they running. When you have a theme where a lot of stuff is moving, you do have a benchmark for that. You can sort of, for example, AMC and GME ran on they started going on Monday, and so it already pulled VFS with it as a sympathy on Monday, and on Tuesday it pulled. Not all of these are sympathies. Obviously, I think really just big Maxon is basically big down. From big down, these are all sympathies with AMC and GME, and so is the VFS, right? And so when you have a theme that pulls a bunch of sympathies with it, you can take a look, and you can, like, if you look at the important information, which is market cap, float, a percentage running, sectors and all that stuff, you can see sort of a bigger picture pattern emerge, right? So you can see that, like, if you and when you see that bigger picture emerge, you can see sort of the two things that I mentioned: what kind of stocks are running and generally how much they're running. And so, if you took a look on Tuesday, you say, okay, so all these sort of several hundred million to low billion market caps with high short interest that are in some way or another, correlated to GME or AMC, they're starting to go. Right? So you can also see how much they're going. You can see that, big ran this is how much it ran pre-market, this is how much it ran during trading hours, right? So you can see that, we had a few that were running in the sort of 30 to 50, 60 range, and then we had a couple that were running more, right? And so you can see sort of the ballpark of how much they're running. You can see the ballpark of which ones are running, and it's no different than when FFIE started running. And what did you start to see? A bunch of 2 million, 5 million, 6 million, 8 million market caps. Again, 2 million, 4 million, 5 million, 10 million market caps. Same, right? And you can see that they had sort of a range to them as well. You can see that here we are in the 100 to 200% areas, whereas here we're on the 30 to 100%. So when you map all these things, sort of patterns arise, and you can see those patterns, right? And now here's the thing: if you're on the long side, right, and you see that, okay, high short interest, mid market cap stuff is moving, and it's moving, 30 to 60% on the low end, 60 to 100 and some change on the high end, then if you identify, and these they move sort of slower, right? Typically, so you can find something that's okay. It's the right thing, and it's only 10% up. Great, buy it. You might write it up another to 30%, maybe 50%, maybe 80%. You don't know exactly, but you get it. And on the, or if you're on the long side and you see these names moving, and you see that they're sort of moving 30, 60, 100%, and it's already up 60%, maybe you missed the boat. You know what I mean? Let it go, unless there's a great setup. So that's from the long perspective. From the short perspective, it's the same thing, but in reverse. Okay, what's moving? How far is it moving? If you see, if it's moving 30, 60, 90%, and you see this big market cap and it's up 20%, is it a short right now? No, it's not. It's you know what I mean? It hasn't gone to where all the other ones have gone yet for you to even consider it, right? And that's where it gets interesting for me as a short, right? Because large market caps are and large floats, they're a better proposition on the short side when the time is right? Versus the small caps and the small floats. And so when you see a rare occasion where large market caps and large floats are running like they are small floats, that's really interesting for a short, because you could put a lot of size. Like when you're trading a 2 million market cap, let's say it's a dollar stock, it's a $1 stock, right? And it has 2 million shares in outstanding, right? Not float, but outstanding. Then that's a 2 million market cap stock. That thing goes from $1 to $3. Cool. It's up a couple hundred percentage. Maybe it's a short, but how big can you be on it? I don't know. Like, it depends on, now you got to find your risk level. There's questions to be asked here. But when you have something that's billions of dollars in market cap and hundreds of millions in the float, then sure, they can run. But at some point, once they give you a setup with tight risk reward, this amount of size that you could put in is much, 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 much bigger than on the small caps, because it's got enough, sort of liquidity and activity with it, that you can really put on size, and B, there's so much supply that it's much likelier to be heavier, right? Mm-hmm. So all of that to say that when GME and AMC came around, I was way too scared to touch it. Way too scared to touch it. Because when something of that level of, market cap and, float goes that crazy, look, I mean, the fate on it is great and everything, like, congrats to everyone, but honestly, like what do you do with this price action? What, you want to pretend like in real time? I mean, in real time, when things are moved like this, I really, to me, I'm not smart enough. It's too difficult. But the thing is that I don't need to be so smart, because when these level of action happens, and it pulls with it other stuff. And when you go and you're like, okay, I understand the theme. It's high market cap, and I understand the range that they are going, right? I'm paying attention. I'm seeing to the range that they are going. And if you map these out, and then you might be able to find a trade. Mali, I always use the menu. With you, I use, not always, but I've started to use more and more of the phrase menu of trade options, right? I wake up in the morning and I tell you, let's see what kind of trades they're going to offer on the menu today. I mean that literally. I input all of these things and I sort them by what I feel is appropriate. Typically, it's by market cap. And so when I do that, and it's a day where mid caps are moving, and I have all the the mains, and I have the sides, and I have them sorted, I could see something. So if we said that everything from big down is the sympathies for GME, because these three are sort of have their own thing going. But when you see that these are the sympathies and you sort them by floats, right, then you say to yourself, okay, I'm sort of seeing 30 to 100% over under as the ranges that are moving today. Now let's take a look at supply. What has the most amount of supply? What's the heaviest boat? And immediately you're going to see BlackBerry and Plug show up, and you're going to compare those two, and you're going to say, well, BlackBerry and Plug are both heavy they're heavy boats. There's lots of float, lots of market cap, but one of them is moving a lot more than the other percentage-wise, right? So you take a look at so of course we are talking about this day here and this day here, right? And so technically they both sort of look the same. You know, they just sort of had a big gap up and they gave it all up, right? And it's true. But from a
Wait,
percentage base,
are you sharing right now in the chart, because it still look like the
oh,
spreadsheet?
my bad. I
Yeah.
was sharing the wrong things. Thank you for telling me. Let me go ahead and share the entire screen. My bad. So going back, right, here we go. So, you know, as I was saying, we're taking a look at BlackBerry and Plug, and they're both, you know, they're both sticking out like a sore thumb, right?
Yeah.
As the biggest boats. And if we take a look on the daily, you know, this is the day that we're talking about for both of these, right? It's this day here where it went to 5, and this day here where it went to close to 4 on BB and Plug. So they look the same. To the naked eye, to the untrained eye, it looks the same. It's a gap up and fade down, gap up and fade down. But they are not the same. This thing gapped from low threes to high threes. This thing gapped from high twos to fives. And on a percentage basis, you know, Plug went way further than BlackBerry, and it's a bigger boat, in both in float and market cap, right? And again, if we're looking from big down at all the sympathies, at the menu of sympathies offered to us, the next thing that's going to pop up is SPWR, which is middle of the pack supply wise, but top of the pack in percentage run. So those will be the two that you will look at. You would sort of look at BlackBerry and say, love the float in market cap. It's just not moving enough, which makes sense. It shouldn't be able to, quote unquote, shouldn't be able to, right? And so you're like, okay, pass. And if you look down here, you see, okay, well, these are the least amount of supply, right? So they're, you know, might potentially be the least heavy if they decide to go. And so again, not going far enough, not the biggest boats at all. Pass. But it will cause you to focus on SPWR and Plug, which I did that day. And so the whole thing was, yeah, GME and AMC, great shorts at some point, too volatile for me. I can't know how to put any real risk on it, like put real size on it, because if I'm wrong, I'm going to get run over. I like it'll blow up my account. If I try to put size on something as volatile as GME or AMC, I wouldn't know how to. So the whole point of trading is to find an area where you want to put size on. You don't want to be like a baby trader, like just trading baby size everything. I don't know if this will go. I'll put a little bit just in case. I don't know if this will work. I'll put a little bit just in case. Nah, that's not trading, man. Trading is looking through all of the noise and identifying where is that like rare 1 or 2 or 3 spots that I see real opportunity to put real size with low risk, high reward, right? And so that's why I ignored GME and AMC. I couldn't put size on. I couldn't. I wouldn't know where I would get run over. But looking at the sympathies that it brought with it, I got really interested in Plug, SPWR, and VFS for that matter. Again, we're looking at the market cap and float and all that stuff, right? Those were the outliers for me. And so that's step one. Step one is sort of looking at the bigger picture and seeing, you know, looking for opportunities within the noise. And so step one was this, and that's how we sort of distilled it down to Plug and SPWR and VFS. But okay, so now that we have our our bigger picture. Sorry, just fix this because bam. Thank you, man. So now that we know that that's sort of what we're looking for, then now what you're looking for is the execution, how to time the execution, where to get in. Like, okay, we understand the theme, we understand the sympathy, the sympathies, we understand the floats, the market cap, we see opportunities, potential opportunities in plug, SPWR, and VFS, right? So where do you trade this? Now, you know exactly where this is going, and anybody that's watched this for a little bit might know, but looking left is one of the first things that we do, right? And so we look on we pull up the daily chart, and we ask ourselves, all right, where is, like, if something is sort of running buck wild, what would be sort of an area where no matter, like even though it's running wild, it'll be an area where there's so much supply that supply means sellers, right? There's so many sellers that it's sort of going to be tough even for that buck wild action to get through. That's really what a looking left level is, right? And when you're looking left, you're looking for tops of like, crazy wicks or bottoms of, meaningful, areas. It's sad. This is not going to be a lesson on how to find looking lefts. We'll leave that for another time. But, you're sort of looking for like tops of obvious channels or tops of obvious big prior runs, or, if that doesn't exist, then bottoms of before a gap down or something like that, right? And so, like me waking up in the morning, and seeing plug running, I sort of have, I sort of look at it sort of this way, more or less. I'd be like, okay, here is, I see sort of the top of the wick here, and then a couple times it passed it but never could go, and then again it passed it but never could go. So I'm looking at these really two levels here. This, which has a lot of peak outs over it, but I think it's really this is really the real area. And here, which is sort of the top of, where it all peaked out from. So when you're thinking about buck wild, like really crazy action, you're thinking it's going to test the higher one, right? Because it's sort of crazy. So you would have these sort of, looking left, right? And there we go. And so on the bigger picture, we've looked at plug as the heaviest sympathy to AMC, running the highest percentage. SPWR ran higher, but it wasn't it wasn't a bigger float. It wasn't. So plug was the heaviest float, running the highest percentage that wasn't AMC and GME, because I don't want to touch those. And so that's what causes us to look at it. And then in the pre-market, you sort of see it's all right. It went over it went over the first level, right? And then dipped below it, so you can maybe you can start short here, right? Because you're like, sweet, went over the looking left level, I'm gonna hit it right here, and I'm gonna risk over here. Cool. Then over here, you got to get stopped out, right? And then over here, as it gets towards the next looking left area, now you really have to start to look. Now we do have to talk about volume here, and what sort of, you have to know what's a lot of volume for pre-market and what's a lot of volume for regular trading hours, because those are not the same. And and so if you look at here, we had sort of 400,000 candles on the 1 minute, consistently back to 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 back. That's a lot of volume for any. That's a lot of volume. You're talking about a $3, $4, $5 stock. Yeah, that's a lot of volume, right? And so we already know we want to get short this because the bigger picture stuff. Now we're really just looking for the execution, right? So here we have sort of the first time it went into a looking left area, and we would have seen, yeah, man, like there's like a volume pop here. It wasn't the biggest volume pop, but still, this is I would understand if you look at this and say, okay, it's starting to get exhausting out, right? All right, but then you got this sweet little lower high, perfect. Unfortunately, it overtakes and it overtakes with volume, right? So if you're already short, you got to adjust for that.
No,
And
one second.
then,
I want to ask on that volume. When you say overtake the volume, if I was watching this real...
overtake the looking left area.
Oh, okay. So no, never
It
mind.
reclaimed,
I told you
right? So
said...
it over. No.
Okay.
So I was saying here, when it did this looking left area, right? I would understand, like it was on big volume, but it wasn't the biggest volume, right? So I understand why you get involved, but I also, you got to recognize that. And when it reclaims here, is what I was trying to say. Then like this still looks like a lower high compared to this. You still got the selling wicks over here. So depending on your risk, you either got to get out here, or if you're not full, I'll even understand if you add here versus here. But, at this point, if you already short, like, I mean, you gotta manage risk here, one way or another. But the volume is absolutely insane. And you get your volume, now you get your big price, you get your big green bar with your huge volume exhaustion right towards a looking left area. So I'm showing all this without my trades on it so that we can look at this with with a clear mind, right? We went over the bigger picture. We went over the price action execution. Now we can take a look at the actual trade, right? And so now my apologies, guys. I don't usually share all my trades to everybody in real time, so I don't have the screenshot of the full trade. Some of these ones I'll go over. I have the full trade. Some of these I don't. I'll do better next time to save my screenshots of my trades. But in any case, so we've now that we've spoken about all of that, and we know this is the first area that it crossed the first looking left and then failed. Here is where it reclaimed. And here was the exhaustion, right? So you can understand why I might want to start short here, add to my winner here, and then depending on risk, remember I said either you're adding here and then getting cut here, or you're cutting right here on the reclaim, depending on your size. And and I had big size because to me this was I perceived it as a great opportunity for the reasons that I mentioned when I went over the bigger picture. Understanding the theme and sympathies. So to me, I wasn't playing here. I was coming to swing a bat. I was coming to make money. Like I said, the point of trading is to find areas, situations, opportunities where you feel like this is an opportunity where you could put on size and you'll make a lot of money. It ain't about baby trading. That's not what trading is about. And so on a day like today, or on a day like that day, I took this as an opportunity, and so I went big, and big means controlling risk. And so for me, I cut right here. And when we saw that lower high, potential lower high action, as I mentioned, versus here, yeah, I added. And as soon as it told me no, I was like, all right. No, so let me know when you're done. And then we got, as we said, we got that right? That big volume. So again, I got short here, I added here, I cut it here, I added here, and I cut it here, right? All fair tries, all great, obviously losers, but good losers, And then after I saw this, we hit the next looking left. It's 9:25. There's panic. Shorts do not want to hold this into the open. Most shorts, depending on your price average, etc. There's just panic. You don't know what open's going to be like. And so we have this absolutely huge volume, and it doesn't quite make it even to the looking left. In such intense volume exhaustion, I was like, all right, cool. So now, when you're trading, you should have an idea for, obviously this is going to come with experience, but you have an idea for what your entry what you want your entry to look like, but you should really have an idea about what you want your exit to look like. Meaning to say, if you're long or short something, you should have an imagination in your mind of how this might go for when you sell your long or cover your short. And for me, for plug, I was going for an all-day fader. I was going for a bell-to-bell trade. Because again, all the reasons mentioned in the beginning of this video, it was a huge, it has huge, big, lots of big market cap, big float. It's a sympathy. It ran a ton for sympathy. I was looking for a bell to bell all day fade on this, and so for me, I put my size right here. And as all of this happened, it was actually quite difficult not to cover. Because the size, B, I had already taken some losses on it, and you're when you have a lot of size and it's really going your way, it's so hard to let a winner run. It's so hard. I think I don't even need to explain this. We all know this. We all know that it's so easier to let your losses run, and it's sort of harder to let your winner run. We have to reverse our psychology in order to really squeeze most profits out of the market. And so in this situation, I'm really proud that I took no covers here, and then I added like a nice add. Like I was thinking about adding here, but I was like, no, let's see how it goes over VWAP. And then when it went over VWAP, I was like, motherfucker, because I got size, man, and I was looking at some nice gains. But I was like, okay, I still see it the way that I see it. If we get a VWAP, if over here it's not able to hold VWAP, fantastic. It's sort of the trade that I wanted to do here, but was too scared to do it here because I didn't have the confirmation that VWAP would reject. And so I just waited, and it sort of gave me a little palpitation. And then and it's not like it was a big deal. Like my average is higher. It's not like I'm going into a loss, but you know what I mean? Like it's just, you put all this effort and stress into it. You already paid, in some risk management over here, you realize some losses. You're down here, you're seeing all this money. And then up here, you're like, are you kidding me? You're going to go, towards like break even, so that's really, but as soon as it did give me confirmation here that VWAP is indeed not holding, I was like, great, more. I want more short. And unfortunately, I don't have the rest of this screenshot. Like I said, I'll do better. I'll do better. I have the other ones I have them better, but the way that it played out, I mean, you can see it on the daily, right? So I was going for a bell to bell trade, and I got a bell to bell trade on it, and it was absolutely, I mean, it was really as good as it gets, as good as it gets. And so this is the first, this is the biggest trade that I want to highlight. Oh shoot, I forgot to bring screenshots for SPWR, but all right, I'll go through that anyway. So any questions, any thoughts on this before we move on to the next one?
Volume, I think. I didn't get the volume part. Pre-market. Can you say again? When you judge the volume pre-market, that if I see real time that big exhaustion bar, then yeah, I guess I can do some action there. But before we get that huge volume bar, like, well, what did you see to put the initial shorts? Because you said size, like the first leg, that the first
Talking
looking.
About what I got short here?
Yeah, right there, and then you add it again because the volume is too like up down, like it's just like,
So
what is the conviction there?
I think that you need to remember that. So let's bring something really important up. Newer traders and even intermediate traders, they put most of the importance on what to trade, not to trade, where to trade it, how to trade it, into price action. They look at price action and they think that's either all I need to look at or most of what I need to look at. And I think you know very well that advanced traders and over, that's not the main thing for them. The bigger picture stuff, I'm like all the stuff I went through in the beginning of the video when we were
Like market cap, float,
looking
percentage,
market cap, float, what all the others are running, you know what I mean? Where's the looking left? Where's inventory on the chart? All of that takes so much weight it carries so much weight of the decision of what to trade, where to trade, that like I said, here, I'm not looking for a sign of whether to trade this, I already decided. I'm just looking for exactly when and how much. And so, like, you can say, I feel like the question that you've asked is and let me know if I'm correct. I'm gonna paraphrase. You said I can understand why the trade. I can understand why you're short here after the volume exhaustion. It's a little bit hard for me, you to understand why I might have traded here. Is that is that what you're asking based on the volume?
Yes.
Okay, so, well, I'm going to be redundant here, and I'm going to just go through the action again in real time for you. And I'm going to remind you that when we wake up in the morning and we see it running, these are the two looking left lines that I'm going to put, right? And so when it hits that looking left, and yeah, you don't know what's going to happen, right? But as it comes close to that looking left, you're like, okay, like this is, look, it's beyond the scope of this video to talk about how to identify what's high volume for pre-market and what's not high volume pre-market. Like, just, I don't want to just, this is a lot of volume for pre-market. It's a lot. And so when you see a lot of volume, and it's nearing a looking left area, and then bust right through it, where was my short here? Did I anticipate this? Did I get front side?
You get front side.
No, I didn't. It's right here, bro. Right? So I didn't hit it here. 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 I hit it here. Here. Right? So you see it, right? So it crossed below the looking left area, and it did it on substantial volume. I couldn't know that there was another even larger volume exhaust coming. I don't really care. Like, I mean, it's not that I don't care. It's that out of the entire things that influence my trade decisions, most of it are not here on the chart. They're there in that Excel sheet that we looked at. You know what I mean?
Yeah.
So when I come in here and I see this action, I'm already biased. I'm already looking for where to short. And so I'm like, cool, hit it right here, right? And maybe it works, maybe it doesn't work. Me and you, we always lose money on this trade, that trade, and we always like talk about how we feel about our loss here, our loss there. And usually, almost all of the time, you know that I don't give a damn about my losses, because look at how it reacted right after that. It's like it's showing you, oh, it's really hard for me. Like, there's inventory here. So yeah, I added. I feel good about the starter. I feel good about the ads, and no, I didn't cover because, I'm going for a much bigger move. So when this happens, I'm like, all right, cool. I'm out. I'm out right here. I'm out. But is it a big loss for me? No, of course not. It's trading in such a tight area that, if you really, if my entries are here and my stop loss is here, I lost a couple cents on a thing that's trading almost $5. That's nothing. Like, I did have size on it, so it did clip me, but still, it's perfectly okay. And then again, now if you're looking at it this way, it sort of does look like it's not gonna be able to bust through here. So it's like, whatever, volume exhaustion, blah blah blah. It looks like a lower high versus here. I'm already short biased, and so I'm gonna add right here, right? So, bam, there's the ad, right? And then as soon as it goes, oh shit, now it's looking like it's actually not stopping here, So out right here. Is that does and you can say that you understand this short right here in hindsight, right? Because the volume exhaustion, right into the look, almost to the looking left area, but couldn't do it. So this one you understand, right?
Yeah.
Do you understand the rest now?
Yeah, I understand. So I guess because of your conviction, my mind, I don't know if it's being a new trader or not, that's backside to you. I guess me hitting too much bottoms.
No, it's not backside.
Well, I asked you. You said I said front side. You said no, I didn't do front side. When you were.
It's like look, front side, backside. We have to define this. Like there's different definitions to backside. You can say that a backside is you shorting something, risking versus a price that's higher than when you're shorting that happened. Let me define backside in the most broadest term possible. Backside is when there is inventory above to the left. That is the shortest, fastest way to describe backside. But it's obviously much more nuanced than that. So like, is there higher lows? Then it's not backside, right? Is there lower highs? Then it's backside. But sometimes you have a situation where you have both. There's both. Right? That's a wedge, right? A wedge is both higher lows and lower highs. That's the wedge pattern, right?
Yeah.
I think it's called a wedge. I don't know. But so it gets, that's why defining backside gets difficult, because you can have like both higher lows and lower highs on the same pattern. So like when I shorted this here, I thought that it could potentially begin backside, right? Because it looks like backside might start here. And as soon, right? And here we had our first, here's sort of a low, and then we had our first lower low right here, right? Potentially. Technically it already is, but you sort of want to go even a little bit lower and then sort of trade high and then sort of, let's say, stop right here and then go trade lower, and then you have a lower high, right? Because this will be a high, lower high, that would be a lower high. This will be a low, lower low, you know what I mean? So you just have to know how these things develop. And then as soon as this happens, you're like, okay, so it's not backside. I thought it was backside, but it might not be. And then this happens, and you're like, okay, maybe it is backside. Nope, it's not backside, right? So backside is this amorphous, it's this shapeless, odorless, flavorless, tasteless idea that we all throw around. But it's simplicity. There is inventory higher and to the left. That's what backside really means. But like I said a couple times, you have situations where you have both lower highs and higher lows, and so you never know. So I'm so sorry, but I'm so sorry to cut you off there. I don't know if you even remember the questions you were going to ask, but if you can remember, try. I'll try to answer. I thought defining backside was very important.
No, I mean you explained it. I think it's really goes back to that conviction, because when you start, because you have a conviction from that sheet, like me not having a conviction from looking that sheet, I'm already thinking when you hit, what if it swipes higher, or it is like always the worst case scenarios like coming to my mind. That's why I didn't have any conviction. Like I traded plug too, but I traded like where you added. After all that volume blow off, more right there, like more conviction.
Which was the best? Which was the best place to trade it? By the way, you don't have to try to be a hero. I know that you really love the safest of backsides. Yeah, and this is the safest of backsides.
Yeah, but these bigger markets got bigger floats. These are different than low floats. Like that's you trade these very different than these low float. You trade them very like put size, because they are not really like you really trust the action. Like one set up, you're out. And I see you a lot on these low floaters. Front side, you let it go up sometimes. I don't trust the action. Yeah. It doesn't matter. And that's why it's so hard in real time to like distinguish that no, that's not that. Like I'm gonna put size, this shouldn't go over high. So yeah.
So two things. First of all, this was a special situation, and I was so close to looking left. So you say, oh, you think about worst case scenario. It's true. But for me, worst case scenario is it goes to looking left and I get stopped out there. It's not it goes to the moon and I'm holding this short bag to the moon. You know what I mean? Because like you said, the conviction came mostly from that Excel sheet. And to my mind, the advanced traders, they don't take all their conviction from the price action. They take it from other sources of information. And the price action is just where all that information and ideas gets expressed. And you can take some conviction from the price action as well, but look, it's case by case. And for the most part, I don't. I take most of my conviction from outside of price action. And so for me, conviction was already here because, because as we look over here, we see that this is the biggest boat that ran the highest, and that like supply matters, dude. Supply matters. And so that's where I got my conviction from. And if you added it to a situation where I'm right next to inventory, I'm right next to supply, that really, really, really adds to my conviction. You know what I mean?
You started your first entry. At that moment, if you go in real time, your risk is over the that, right over that, wherever the high was, or you waiting way go over the second line.
You asked me that as if you didn't see where I covered.
Yeah, if you are just trading real time, I don't know if it's gonna reclaim based on that information you have.
I'm not following your question. The answer is right here in front of me.
Yeah, but let me so like you covered your first entry because at that moment you had enough information, it reclaimed, so you don't need to hold it to hope like that's more information. And what I'm asking is, when you short, go back to the candle that you just got short, like, yeah, right? And let's say it didn't do that lower highs, it instantly, as soon as you short it instantly reclaimed back to the highs. Are you cutting over the highs, or you waiting over that second high? Yeah, right there. Let's say
it doesn't go low here. Let's say it trades higher.
Yeah, exactly. You hit your short, it just does a V shape, and then it right best to goes to highs. Are you out in that high, or are you waiting for the next high? That's what I was asking.
It's an odd question for me. Because you can see that I'm gone before it even goes over highs. So I really don't understand the question. I don't understand the question. You think that because I added here, then I cut here, and if I wouldn't have added here, if it never did this, if it would go right out, then I wouldn't be gone. But I don't understand what here's the idea. Looking left, I want to be short this thing. No matter the price action, I want to be short this thing because of the stuff I saw on the Excel sheet. So now I got my two looking left areas that I would have drawn in the morning, and it passed the first looking left, and then went right below it. So here's the looking left. This is it, 468. So and you saw in real time. I drew this without looking at the 1 minute. I drew this by just looking at the day. Right? I did this live real time with you. And so this is what I'm looking at. You just see how well it corresponds, and this is why I use these kinds of levels. But you see how well it corresponds to the intraday. So my thesis is I want to be short at an area where it's too much supply. It can't overtake supply. Demand cannot overtake supply. And I'm thinking this is it. And as soon as it tells me that that's not it, I'm gone. That's as simple as I can say. What, is there something else you're looking for? Is there a question or?
No, I don't know if I could explain that. Can you go to the other chart?
Yes.
Can you just zoom in where you enter?
Yes.
Let's not look at what happened on the right. Yep. Yeah, right there, right? So you enter, and we don't know what's gonna happen next. As soon as you enter, let's say you hit the low, and then
I entered on this candle, but okay.
yeah, you entered, and let's say it instantly.
I did enter here, but like here. Okay, anyway,
Okay,
go ahead.
let's say you hit that, and then it
Yeah.
instantly went back to whatever the high was, 490. It went to 490. I was asking.
I would be covered before for him.
Okay, that's what I was asking.
Right,
Because
but
sometimes I make a looking left trades, and we have conversations. Sometimes you will tell me, because sometimes I cut too early, and you will tell me, Mali, it didn't even test looking left. Like, why are you chickening out at the highs? And sometimes
right.
you do cut right before that. So I was trying to understand the distinguishment. Why do you
Well,
wait sometimes to go over looking left,
so
wait, get out, or stuff like this? You just out like instantly.
right, but there's two different answers to that question. The first answer is that your instinct a lot of the times is, and so many students, you know, and aspiring traders, their instinct a lot of the times is to hear, say, somebody with experience say something and just apply it broadly to every situation.
Yes.
You know what I mean?
Yeah, that's wrong.
And that is so. You already know this wrong. You don't do that no more. But that is how it is. And so you touched on something earlier. You said sometimes you see me trade. You said it in a different way. You said sometimes you trade and you're really in it, and you're out, you're gone. You don't mess around with it. Sometimes you let the price go against you and you stick around. I tried to correct you in real time as you were talking. I tried to say, to direct you to the heart of the matter there. Sometimes I trust the action. Sometimes I don't trust the action. That's the heart of the matter. Is that on small float rigged stuff, so we all know lower highs is like a downtrend, higher lows is a uptrend. You know, like if you get like a lower high, then you know that's it. You know, it's going to start the downtrend. You know, I mean, all the like classic, like whatever, bull flag, bear flag, wedge, cup and handle, blah blah blah, all that stuff. That works for large caps. They are not manipulated because all that stuff is just expression of supply and demand expressed in a candle chart format. But so like, you know, when a bull flag happens on a large float, it's real demand. It's real demand. It's pushing it to create a bull flag pattern and eventually breaks out of that pattern. And that's a real breakout. And on small float rig, they know that those are the patterns that everyone's taught. And so they just ping to the chart to look like one thing, and they want you to believe that that's what it is, say lower highs, and then they'll rip your face off. Or a VWAP fail, they want you to believe that it's really having a tough time reclaiming VWAP, and then they'll rip your face off over VWAP, right? And so it's just, where do I trust the price action and where do I don't, right? So for example, on some small caps, you know, I might see it go run at highs, then I'll start short at the highs, and I'll see it sort of lightly, just barely reclaims highs, but I don't really believe it. I think they're just trying to let's say, trap shorts and blow out some trap longs, excuse me, but to make them believe that they might go, make shorts nervous, make them cover, basically shake out both sides of the trade, the long and short. And then, you know, fails. And so I'm not going to cover into that because I'm doing reverse psychology, right? I'm thinking about the riggers and how they're trying to fool the normal retail trader. And I'm trying to take the opposite side of that. Versus plug, ain't no riggers here. What, nobody locked up this float? That's not possible. I mean, possible, but highly unlikely. So I'm cool just trusting the action. Here, I needed to get lows, and I didn't. So I just take the action at face value. And it's just a matter of knowing when to trust the action and when to not trust the action.
Yeah.
All right. Any other questions on this one?
No.
All right, cool. SPWR, unfortunately, I don't have I just realized I don't have the screenshot trade for that one at all. But look, man, like really, it's similar stuff. I got trade. I remember. I think me and Brian took this trade together in real time, right? And so I could just tell you, it's in the Discord logs.
Yeah, I remember after the
Right
last.
here,
Yeah, right there. Yeah.
right here, right. So we were looking at SPWR in the same way that we were looking at plug from the Excel sheet, right? So we're saying these are the two that have the biggest inventory that has the biggest of both that ran the most amount. So these are obviously the two in VFS. These are the two that we want to hone into. But the action off open was sort of tough, and I'm not like, and so I don't think I was even here. Was this when I had to go to school because River had her skin thing? I think I might have been called away to the doctors over here or something. I was telling my daughter, but and so anyway, I couldn't like I could trade plug, but off the laptop, it's anyway. So I missed this, right? But I want to get short this. I wanted to get short this. We're talking about this, and so you're looking for a chance, and now it goes over here. You're like, cool. Where's the short? And anyway, for one reason or another, I can't remember why. But like we were like, I didn't get short here because I just couldn't handle it while I was mobile. More than that, more than the plug trade. And then over here, I missed the trade, so we're looking for an opportunity, and then like this action happens, right? And so again, if you sort of do your little lines and stuff, this will be a line that you would have, right? And then this happens, not involved, bam. Right here is when I write in Discord, trading it versus 370s.
Because looking left, right?
Because predominantly because of the Excel sheet. Because I just want to be short this name. I'm just looking for when, right? And so I'm already short biased, man. I'm just looking for like sort of like I'm just looking for something in the price action to tell me now. But where most traders will look at this and they'll try to like take away some sort of so when this happens and then this happens and now this you can see that it fell below here and now it's having a tough time reclaiming this, so this is the perfect risk reward versus this. Yeah, sure. And that's exactly what I did, but because of the information on the Excel sheet.
Yeah.
If this same thing happens on if this same exact action happens on, say, big, which is a lower float, lower market cap that's not as highly extended, then I don't give a damn about this. I'm not trading this. It all has to come together. You know what I mean? So the bigger picture, the stuff on the Excel sheet is why. This is just the when. So when this as soon as this candle happened, I immediately, as we talked about it in Discord, I was like, I'm trading five, like this line over here, these 520s, whatever they are, I'm trading the 520s versus the 570s. And it's 570s. Why? Because I'm not gonna get stopped out here or here. If it does go there, it's gonna have to stop me out for real. It's gonna have to, because this could always reclaim and then trade over here. I'm not gonna risk this. That's too tight. I'm not gonna risk the very high because I don't want to be that punk that just gets like, same as like that LiDAR trade, if you remember from Friday, where the line was 220s. So where was my stop out? 230. Same thing, right? And so as far as from a price action perspective, yeah, it overtook VWAP and then it overtook the reclaim high and then it traded over it. So it's quite obvious why this line. And then as soon as it fell below it, now, like if I couldn't possibly get short here, how would I possibly know? What would be the sign? Why get short here? There's nothing that tells you here, but now when it falls below here and now this acts as resistance and it's confirming to you, then, realistically you could short this, which is really shorting this just with confirmation, right? Exactly like, exactly, where's the damn? Oh, exactly like how on plug, I couldn't get short this. How would I know? There's no confirmation. But now, after it did its dance over and came back down, now I can trade this. I'm trading this, but here, right? In the same way, I'm trading this, but right here after confirmation. But the real why is in the Excel sheet. It's not here in the price action.
In the daily chart of SPWR, there is a looking left level where did you do that on purpose, or like do you also look at that too, right, on that daily?
Of course.
Oh, okay.
I always look on looking left.
Yeah. I mean, I think
you're right. That's a perfect looking left sort of to one area of obvious inventory over here. But again, I mean, I don't know. It's so hard to remember everything. It was crazy days. But anyway, that's that. And so, any questions? Any thoughts?
No, this one is very straightforward. I mean, I understood this.
All right. So there was VFS. There was a couple others, but I think more than anything, to talk about the GME AMC saga, to me, it's reflected here in these 2 days, Monday, Tuesday, both left and right side, both the day ones and the MDRs. And the way I looked at it is, okay, we got a theme. What falls into the theme? Where within the theme, outside of the leaders, might there be opportunity? And you can do that short and long in the ways that I mentioned. If you understand what the theme really is, what's running and how much are they running, so you catch something, if you can find something that's within the theme, it's correctly within the theme, and the amount that it ran so far is substantially lower than how much the rest are going, that's a long. And exactly vice versa. If I identify the theme, and you can find, if you want to be short, so you're looking for, okay, what's the heaviest boat that ran the most, that's a short, right?
Yeah.
All right. So I think that's it for the AMC GME thing.
Yeah. All right.